Coming up next, market predictions. A bank analyst weighs in on precious metals. For 2023, will gold or silver go up first? Which metal's price will lead the way up? Previously on Silver Heist. Please subscribe. Welcome to Silver Heist. Thank you to our returning subscribers and guests. Well, today's news, I'm going to bring you a story from Kitco. It's a Wells Fargo analyst on where he sees the precious metals going. I'd like to thank Dr. Who over on Instagram for pinging me with this news story. Before we see where gold and silver are going, it's important to see where it's been. So just recently, the year of 2022 has ended. And so here's the table from Macro Trends on the gold and silver year-end closing prices. So for the year, gold is closing at $1,824, and that is a change downwards ever so slightly at 0.23%. But silver is closing the year at $23.96, and that is actually up 2.64% from where it closed in 2021. If you're like me and you like holding physical gold and silver and you like breaking news, please give this video a thumbs up. Let's get to the news story. This is from Kitco News. This is brought to us by Anna Golubova. She does the 3-minute news updates on weekends for Kitco News. Gold is in the penalty box. Wells Fargo on why gold's next move hinges on silver. The silver market is signaling that gold's weakness is temporary after the yellow metal's recent run, according to Wells Fargo head of real asset strategy John LaForge. I'm a little more positive on silver now that we are back to $23. It's the high beta play. Silver is showing signs that whatever weakness we see in gold, it is probably short-lived, LaForge told Kitco News. When silver starts beating gold, it is closer to a bull market in precious metals versus the other way. As 2022 wrapped up, markets look exhausted. Stocks have been in a straight march lower, and gold has been taking its cue from risk-on assets like stocks more than reacting to the Fed, LaForge said. And even though gold has been tracking risk-on assets, it has reacted mildly. You can sense gold wants to go higher next year. Gold had a rough 2.5 years, he added. Gold is already starting to price in a pause by the Federal Reserve, followed by an eventual pivot. In the last couple of months, with all the talk about the Fed pivoting, gold started to perk up. Next year, both gold and silver will do well. Silver might do even better, LaForge noted. Wells Fargo sees gold being between $1,900 and $2,000 next year. If we can hit that, my bias is to increase those targets, he pointed out. But in the meantime, gold is still in a prove-it mode. This is because while commodities have done well in the last couple of years, gold has been stuck. I need confirmation through the price that gold is starting to move. If it does, it could go even higher than $1,900 to $2,000, LaForge said. Silver has a chance to outperform gold next year because it is a high beta play and is known to be more volatile than the yellow metal. Over a supercycle, which is 10 plus years, percentage-wise, silver does better than gold. That's what's happened during the last cycle between 1999 and 2011. That is typical, LaForge said. Silver could hit even its new record highs above $48 an ounce in this supercycle, but that could still be 5 years away, according to LaForge. New highs are not typical until the back half of the new supercycle. Those new highs in silver, if they were to occur, would still be 5 years away. We're only in year 3 of this bull supercycle, he said. Top 3 drivers. The anticipated Fed pivot is the main trigger behind higher gold and silver prices next year. That might not come until mid-year, but gold has already been reacting positively to markets pricing that in, LaForge explained. The second driver is the underlying fundamentals, particularly from a supply growth perspective. You don't have much growth there, so only a little pull on demand is needed, he described. The third driver will be gold as a contrarian play. The precious metal has underperformed relative to other commodities during the last 2 years. This is a sign for some investors to start rebalancing their wins and losses and moving more money toward gold while it is still cheap. You will get investors coming back to some of these contrarian plays. When you're in a bull supercycle, more assets under management start moving towards commodities, and it tends to lift the entire group up, LaForge said, and gold hasn't gotten that yet. Typically, at the end of the year, you buy losers and get rid of winners. That's what is going to happen with gold. It's been in the penalty box for 2.5 years. It looks very cheap relative to other commodities. A Wells Fargo analyst believes gold is cheap, but he also believes silver is more volatile and will lead the way up. I recently did my own independent analysis, and I found silver spot price is up 30% since September 1st. If you want to watch what happens next, please watch our featured video.